So today we would get started with market structure patterns, and we'll be starting with the head and shoulder pattern, classic head and shoulder. So what is a head and shoulder pattern? A head and shoulder pattern is a bearish reversal signal. So it signals that a bearish trend may start soon or would see price fall for a bit. So what does it consist of? First of all, we have a high in price. So first have a place where price makes a high, so a top, right? I don't know if I mentioned this earlier, but in an option we have higher highs and higher lows. So we have a high, a higher low. So this is the previous low, and this is another low here. So that's the higher low. We have another higher high, and we have a higher low, higher high, higher low. So we do not make lower lows. So when we start making series of lower lows and lower highs, that's a downtrend. But in an option we make higher highs, lower highs. Get so that is an option. So now, first of all, make highs. Now in head and shoulder pattern, we make a high first, one high, then we go down. Price traces, right? And then we now form a higher high, right? So when we now form the higher high, price goes down again. And then it goes up the third time. But this third time, it doesn't go above the previous high. It stays within the area of this first high that was formed, right? So it stays within the area of that first high. So it does not go above the highest one. So that's what we now call it a head and shoulder pattern. So we have two shoulders there, one head, right? So that's head and shoulder pattern. So now what is the importance of this and how can we use it? So you see how, like, why would you say that this is a bearish reversal signal? Because first of all, we made a high, then we made a higher high, right? But then we now failed to make another higher high. Now what does that tell us? That tells us that this trend, the trend is weak, is getting weaker, right? So if we cannot make series of higher highs and lower highs, that means the integrity of the trend is no longer there. You understand what I'm saying? So the intensity of the trend is no longer there. So if the trend is intense, if the trend is progressive, we should keep seeing higher highs and higher lows, right? But here we see a high, we see a higher high, but we do not see another higher high. So if we see another higher high, okay, so this trend is bullish, right? So when we now see that a lower high is formed and price failed to get above here, it is refusing to get above here. What we now do is we connect the beginning of the head or the end of, like how I put this, the base of both shoulders, exactly. So this is the left shoulder, this is where it started, this is where it ended, and this is where the right shoulder started. Or let's just say we connect the base of the head, right? So where the head started on both sides. So that's the here and here. We now draw a line that joins them together and we project it out in time. That's our a trend line, right? So we call that thing neckline. So this one is the left shoulder, this is the head, this is the right shoulder here. So this neckline is what joins the base of the head together, the 2 points where the head formed, right? The 2 points that form the head, the 2 loops that form the head. So that is where we connect together to form our neckline. So when price goes below that neckline, we would now be waiting for a retest of price. So here, hold on, let me just zoom in a little bit so that you guys can see more clearly. So this is still our neckline here. Here we can see that price goes and drops below. We touch the neckline, we go up again. Then we touch and break it, we break below the neckline. And then where we would not pick our trade entry is when price rallies back up, price goes up again and touches that neckline. Then we'll say, okay, price has gone below. So price has made a lower low, clearly here. So you made a lower low and then tested our neckline. So we will now place a sell there. Why do we place a sell there? Well, because since we say that this thing has failed to make another higher high. That's an indication of a bearish move, right? That's the indication of weakness, right? Indication of weakness of the uptrend, which means that more sellers are here now and they are not willing to see price go higher. So there we now wait for price to break below the neckline. When price breaks it below the neckline, surely our previous support is broken. This is our previous support, right? This area here is our previous support, you can see. So if price breaks below the neckline, that means our support has been broken, right? And that is now another indication of the weakness of that trend and that indication of bearishness, right? Since price has broken support, we have made a lower low, making lower highs, and then we now make a lower low. That's now okay. This bearish trend is probably, strong, and we should look to get into it, right? So while we now wait for price to retest. Why do we need to retest? Classic support and resistance. We wait for price to test back into our support. That was our support, but now it's now become our resistance. Since we are looking at price as bearish, right? It's now become a new resistance for us. So when price goes back into that support line, let me just insert in line there, so it's not be confusing. Yeah. So this is our support line. So this is our this is the place that this is the previous support, right? So price goes below, breaks below it. So we now wait for price to test it again. So which means if we test about our neckline, right? So when price tests the neckline, we will now sell. And then our stop loss will be at the end of the right shoulder. That is the top, the previous high. That's the previous resistance, right? That will be where our stop loss will be. So if price breaks that, that means we're making a higher high, and then that bearish move is invalid. Okay, so this will be our stop loss. I'll add a line. So our stop loss is gonna be here, the top, this right shoulder, the top of the right shoulder. That's where our stop loss will be. While our TP will be the distance between this head and the base of the head here, the distance between this top and this bottom here. So we'll now get that area, number of pips there, this price range, number of pips there. We'll now get that same number of pips from our entry, right? This retest part is our entry. So from our entry to we'll now okay, let me just do it for you guys to be, you understand this straight. So I'll draw a rectangle now. So this is where the head, this is top of the head, down to where we retested, right? Sorry, down to the base of the right shoulder. So we'll now take this zone here. We'll now say, okay, this is the area that price moved when it was coming down. So we'll now say, okay, this same area is the number of profit, the amount of profit I want to make on this trade. So we'll carry that and then replicate it. Replicate that. So we'll now make it from our entry point down. So we'll put our TP down here. Our TP is gonna be down here. I'll insert another line. So our TP is gonna be here. That's the same distance between the start of the head and then the bottom, and then from our entry point to the lower side, right? So we test our entry. Our entries at the retest point. So I'll move it up more correct. So our entries at the retest points, and this is our stop loss, and then this will be our take profit. That is how the head and shoulder pattern works. Let me just delete some stuff off this chart. Make it cleaner. So I believe that I've actually helped you guys to understand the concept of a head and shoulder. And as you can see, in this case, the head and shoulder does not feel. Sometimes to feel, but the thing is that it's going to work more times than it fails. Yes, most likely it's going to work more times than it fails. And yeah, we have the price doesn't go to our stop loss. It starts being lower and then it hits our targets before we continue higher, right? So that's the head and shoulder. The like the opposite of head and shoulder, or the sister of the head and shoulder, is the inverted head and shoulder pattern. The inverted head and shoulder pattern. I'll just show you guys real quick. Yes. So this is the inverse. So we have price going down. It makes under lower low, but it now goes up. But now it feels to make under lower low, which means that the downtrend is getting weak. So right now the trend is lower, not on the upside. So this is a downtrend now. We refuse to make a lower low. So we wait for price to break above our neckline. Our neckline is the line that joins the base of the head, right? It joins these 2 points. So we draw that out in time and we wait till it touches that. If it doesn't touch that, we keep waiting. Like if it doesn't touch that, then we keep going higher, just leave it. There'll be other opportunities later. You get. So there's no rush. If it doesn't hit it, you wait till later. There's absolutely no rush. Just have to be patient in this trading game. So we wait, and later on we see that price comes to test it. And when price tests it, that will give us our entry, right? So as usual, we'll put our stop loss at the previous low, and then our targets will be distance between here and here. We'll calibrate that same distance and put it at our target. So I'm going to draw it out just for you to see that, see what I mean again, just for you to sink in. So we have distance between this place and this place, right? So we'll take that zone, that area, and then we'll pick that from our entry. Then we'll now place our target up there. Okay, our target is not that far. So as you can see, price actually hit our target. So price we tested it, gave us an entry, and then it went up higher for our target, and it has even gone a little bit further, but we have to not be greedy. We just take our profit here and go and sit on the sidelines and watch for more opportunities. So you don't need to pack all the money in the market. Just take what you need to take and leave. Take what you need to take and leave before you lose the that you have gained. You get. So take what you have, leave the market, wait for more opportunities. You come back later. You get. You don't have to pack all the money in the market. If you keep waiting, this thing can now reverse on you. You'll be hoping that okay, it will still rise. But it might never rise. So if you hit your target, you stay out of market. You thank God that you have a profit, and then you can enjoy yourself. Maybe you can take the money, buy yourself something nice. You get. So that is all for the head and shoulders pattern. I guess I'll see you guys in the next video. So yeah, that'll be the end of this video. Take care of yourself.